Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to do a stock analysis on Alibaba Group, ticker symbol BABA. So for today's agenda on Alibaba, I'm going to give my price target. We're going to go over 2021 Q4 earnings. Again, this is fiscal year for them. Business description of Alibaba. We're going to go over the fundamentals. We're going to look at price history and some headwinds they've been facing. We're going to look at their price performance versus some of their peers. And finally, I'll give my thoughts on Alibaba. If you're new to my channel, I do stock analysis, personal finance, and investing topics. So if you like this type of content, please consider subscribing. Also, if you like this type of video, please hit that thumbs up video. Not only does it help you, it can help other people that also may find it useful as well. So thank you so much for watching. Now back to the content. All right, so I'm going to reiterate my price target for Alibaba of 300 to 350 in the next 12 months. I believe the upside potential is around 36 to 59% based off of its current price around 220. The downside risk I think is around 18%, which would challenge the COVID-19 low at about $181 a share. Now, I did this stock analysis about a month ago. I believe I published it around April 6th. So again, there has been a few different changes. However, I want to go over the Q4 earnings of 2021 for Alibaba. We want to really see some growth here. Moving on to 2021 Q4 earnings, Alibaba missed on earnings per share and they beat on their revenue side. This was partly contributed to the $2.8 billion fine that was levied on them just last month. So if we look at the results, the analyst estimated $1.83 per share. They reported $1.58, which is a miss by 25 cents. On the revenue side, the analyst estimated $27.94 billion, and they reported $28.6, a beat by about $690 million. If you look at their consensus EPS moving forward, you can see that their EPS for the next fiscal year is around 37% growth, and then for the year after that, they're estimating 9%. So really just looking at that first year, March 2021, about $10 per share, forward PE of 22. So that looks good. About a 77% increase year over year. So that's pretty awesome to see that quarter over quarter growth. And then if we look at their cloud growth for last earnings on Q3, they had 58% year over year growth. And they were really proud of that. Compared to the year before, it was 37%. So a little bit of a slowdown to 37 from the 50s mark, but nonetheless, still fairly healthy growth rate there. Hey, you're still watching. Please consider liking the video. It helps me out a lot with the algorithm. Now back to the content. All right, so for those who are unfamiliar with Alibaba Group, they basically have four sections: core commerce, cloud computing, digital media and entertainment, and innovation initiatives and others. Cloud computing makes up about 8% of their business. Digital media and entertainment at 4%, innovation and other initiatives at 1%. The remaining 87% is under the core commerce. And under core commerce, they have lots of e-commerce business. So they have Taobao, they have Tmall, Sunart, Tmall Mart, AliExpress, Alibaba.com, just to name a few. And they probably have another 15 brands plus underneath that. So they have a lot of different assets that are bringing in different, but again, where they're bringing in most of their money is under core commerce, where they're buying and selling products to end consumers. Now, one of the things that I think is interesting about Alibaba specifically and why their margins are so high is they're not actually doing the logistics similar to what Amazon does, where they have all these warehouses and they're storing products and they physically do the shipping as well. Really what they do is they act as a broker. They match retailers with consumers, and the retailers ship directly to the end consumers. So they're not actually creating that infrastructure to ship the products. They're just facilitating the transaction between the retailer and the end consumer. Now, I almost forgot to say their cloud computing section, while it only is 8% of their revenues, it is where a lot of growth is happening inside the business. So again, we'll continue to watch for growth in this particular segment and expect that to grow as a larger percentage of their total revenue going into years to come. All right, next up, I want to go over some of the financials of Alibaba Group. If we look at total revenue between 2015 and the end of 2020, we can see that they grew the revenue between $12 billion up to $72 billion in the last year. which is quite healthy. If we look at that revenue growth of 45% all the way up to 35, down to 35%, it's fairly healthy, indicates a really good growing company, and they continue to expect that similar type growth going into quarters moving forward. Now, if we look at their gross profit, we can see that was also increasing fairly healthy year to year. And we can see that gross margin has started to dip as they've gone over the last couple of years, going from about in the 60s down into the mid 40s the last couple of years. If we look at their EBITDA, again, that looks to be healthy as well, and their EBITDA margin has been shrinking a little bit, down about 10% in the last 2 years from the previous years. And then if we look at their net income, around $21 billion for 2020, this is, I think, really exceptional, having a 29% net income margin. So that's pretty good to see there, as well as it's up from the previous year numbers. So really good, again, really good income here, really good revenues, and I think as a percentage of their total, if their price to earnings is at 24 right now, and their price to free cash flow is around 28. So I think things look pretty good right here at these prices. Now, normal price free to free cash flow is about 15 to 20, and the PE is about 15 to 20. However, Alibaba is not a normal company. They have a market cap around $600 billion right now, and with those PEs being higher than the normals, it's really just pricing and growth. So again, these companies that have higher than average PEs, we need to just make sure that they have the growth associated with it. And if we look at that revenue growth year over year, we do definitely have that and see it that it's warranted, and they've grown that revenue quite substantially over the years. And again, we'll want to look at their earnings to make sure that continues into further quarters. All right, next up, I want to talk about some price headwinds that are affecting the stock price. First up, we got regulatory risk. Back in November, Ant Group's IPO was delayed, and that caused a very sharp, drastic drop in stock price from about 300 down to 240, 260, I should say. Shortly after that, a antitrust probe was launched into Alibaba Group that recently was settled for $2.8 billion, which is a fairly small number in comparative that free cash flow that we discussed earlier. And if we look at further probes going further, I think this could be possible. Again, there's no word of it right now, but it's speculation on, is there going to be more regulation put on these Chinese companies by the Chinese government? The next thing that happened in that short time period was Jack Ma just disappeared completely for about 2 months, and people were really worried that the Chinese government muzzled him. And since he was even though he's not the CEO, he sits on the board, they were really worried about his leadership or lack thereof, just not being around while the stock price was just, declining precipitously. So next up, the growth stocks and interest rates. So there is, as interest rates go up, or when they decide to go up, which I don't anticipate for another year and a half, growth stocks may see a steep decline in a short time period. And that's just because the return you can get on, the risk-free rate is going to be higher, and that just makes stocks a little less valuable because the risk-free rate goes up. So the risk premium gets smaller. Now, on the delisting threats, this is something that just keeps happening and happened under Trump. It's happened several times under Biden. Who knows if this is actually going to go into fruition, but we'll keep our ears to the ground, see what's happening. Next up, I added 4 E's on this chart to indicate when earnings were released, to kind of get some sort of indication on what we may anticipate happen. Back in May, the price was trading around $200. After that, up until the next earning calls, it went from about $200 all the way up to around $250, $260. Immediately after the earnings call in October, they had a steep increase in price from about $260 to a little less than $300 in a 14, 15-day trading period. And then from there, they traded a little flat for a few months. Then they broke over $300, about into almost $320. And then this is when all those things happened around their earnings call. So actually after their earnings call, it went up, and then the IPO was delayed, and then it just went kind of just pooped out. So again, when their earnings was released back in February, basically the stock stayed pretty flat, and right before the antitrust probe came out, it dropped back again. What I'm hoping to see in this next earnings call is good growth, good revenue, really strong financials with Alibaba, and I'm expecting to see something similar to what we saw back in May, or something similar to what we saw back in August. So hopefully we see that increase slightly. It should take a little bit of time, but we're sitting at 220 right now. I think there's some good upside here. Next up, we have performance versus peers. So if we look at Alibaba compared to Pinduoduo, JD.com, and Amazon, Pinduoduo and JD.com are both Chinese competitors. Amazon is what Alibaba is, often referred to as the Amazon of China. So I always include them on their performances. So if we look at Pinduoduo, they're up 102. Their smaller company in terms of total revenue is much, much smaller, although they do have a lot of active users on their site, and they've been rapidly growing. Although I do think their stock price is definitely pricey right now, so please be cautious there. They're up over 200%, just like 2-3 months ago. So be aware there. If you look at JD.com, they're up 40% for the year. Amazon's up 30% for the year, and Alibaba is a little less than 8%. So Alibaba is definitely performing, 20 to 30% off of the two bigger names, JD and Amazon. And I definitely think that their stock price has been hit more from a regulatory perspective, more so than some of the other Chinese stocks. But we'll have to see in the future. They are like the biggest name in the game in terms of e-commerce in China. So they definitely are a leader of the pack there. And so I'm hoping that they've already kind of gone through the largest slump that they're going to face, and maybe there's some more greener pastures here in the future. All right, so what are my thoughts on Alibaba stock? I did reiterate my price target of 300 to 350 in the next 12 months. I do still think that's possible. I think there is some regulatory risk associated with Alibaba, so you should be cautious of that if you're investing in it. The other thing is they still have strong growth. The antitrust probe is behind them for now. You have a lot of good things happening for Alibaba. You saw good top line revenue growth, which is great to see. This quarter, while they did have a miss on earnings per share, they did still beat on revenue, so that's good to see. And their year-over-year revenue was up 77%. So for those reasons, I still think Alibaba is a good buy. They have a decent price to free cash flow, decent price to earnings. They look very attractive as compared to other folks like Amazon has a much higher earnings per share, 60 compared to Alibaba's around the 24 to 28. So really good stuff there for Alibaba. Hope you enjoyed this video. Frank Finance out.